Hi everyone. Today we got another nothing burger of a day. You can see we got the spike in the after hours yesterday, gave all of that back and then some, filled the gap back to those lows, caught a little bit of a bounce, did close above the level, some wicks of volume there at the end of the session, but still could not get above that 55 EMA. So still consolidation. I still believe this is a topping pattern, kind of left shoulder head, right shoulder forming here, and I am still expecting this to sell. But let's take a look at all of the charts and see if we can find some direction for tomorrow. Do me a quick favor and like and subscribe and watch the video till the end to help out the channel, and let's get started. Looking at news today, we did get the FOMC and they did hold rates steady as we expected, but they did make some more notes about potential uncertainty, potential stagflation for markets. So pretty much everything we expected. They're continuing to watch the markets just like we are, waiting to see if inflation is going to come down, waiting to see if the job market continues to soften. We have seen a slight softening, but not enough to spook the FOMC. So right now we are still in a holding pattern, waiting for some clear direction, and you can see it back here. December of 24, we got to this level, and we are still here in May, so several months at this level. Last time we were flat for a couple of months, we saw some major declines in the time shortly after. You can see hold, start to decline, depression, hold, start to decline, recession with COVID. And that trend continues here. You can even see it slightly before back in the 2010s, flat for a bit, starts to see decline, and then you have recession, depression at the end of the dot-com bubble. So we'll see. Is that going to be another iteration of this here? We have not seen clear evidence quite yet. A lot of people are still hoping for that soft landing, and it is still potentially a result that could happen. Moving over to fear and greed, you can see we did step down just 1 point to a 56 from a 57. Not a lot of movement, still choppy here, still well below that 125 SMA. Strength continues to improve towards that zero line. Breadth, still extreme greed, rallying aggressive. This is the 200. I just don't believe we're going to go too much higher than that, but certainly a possibility always. Put call ratio continues to decline, still in regular fear. I think this is going to give markets the opportunity to go lower here soon. Volatility continues to hold relatively elevated in this kind of 25 area, well above the baseline between that kind of 14 and 17 area where we've been stabilized for a long time. You can see back here August of 24 up until really February, we were in that same trading range. And then safe haven demand kind of hit peak. Now we're pulling back a little bit, still extreme greed. And junk bonds, same thesis here. So plenty of room to the downside as we sit in regular greed. Moving over to the economic calendar, obviously we got the FOMC today. That was the biggest thing, but we did have consumer credit also came in, pretty good number there. Tomorrow we had Fed balance sheet. That's going to be interesting. They did talk about more quantitative tightening in the FOMC, so they're not doing any kind of easing or anything yet. There was rumors about that, but they said they are going to continue to tighten, so we're not getting any buying of bonds quite yet. Want to see what Atlanta Fed GDP comes in. That was a big jump on the Tuesday. We'll see if they make any adjustments on the Thursday post FOMC, and then jobless claims there for Thursday, and really not much here for the Friday. Moving over to the charts, we did get a bit of a nothing day. Once again, up about a quarter to maybe a third of a percent somewhere in here. We've been flat now for 5 trading days since Thursday last week, and we are still here end of Wednesday this week. Momentum continues to fade. RSI still hovering, so really very little movement here, and you can see it on the daily chart, really just consolidating in here. And I think this 1 hour is waiting for that 144 to kind of come up here. And once this finishes consolidating over the next day, maybe 2 days, we're going to get below that 144 EMA, and then we're going to see this push back down to the 550 level, 540 level. Realistically, 535 is where I expect to go at least. 21 EMA sitting in there as well around that 540 area. So in this zone is where I'm looking for in the short term. Ultimately, if this rejects off that 200 SMA, I think this is going to sell a lot more, but in the short term, this is where we're at. Looking for some levels in here. We just can't seem to get above the trend, can't seem to get above these highs over the last couple days, and I am still bearish on this structure. Moving over to the Tasty charts here on the hourly, you can see sideways consolidation. We are dead center on these ATR bands, cannot get above. That first ATR band could not get below the ATR trailing stop 555.59. Once that happens, that's going to put us back into bearish conditions, but that's what I'm looking for, the 144 EMA in there. And you can see a really similar setup here going back to the 14th, 15th, where we had kind of this consolidation, pulled back to the 144 EMA, consolidated, and then once we were below it, then you saw an acceleration down. Similar thesis here as well. Consolidation, waited for these EMAs to consolidate, and then once we did get below it, then we saw an acceleration lower, retested those levels, and then continued lower. So that's what I'm expecting for now, waiting for this to consolidate just a little bit more, a day or two in my anticipation. And then looking at the 4-hour chart just for a second, you can see that trailing stop 552.27. So right in that same area, just a little bit lower. It's still bullish conditions here, still in the middle of this zone. But I wanted to highlight that we did close below that 8 EMA. We've been below it over the last couple days, gapped below it, we've stayed below it, and that is a little bit of a bearish indicator starting to show that these are rolling here to the downside. Then moving over here to the NASDAQ, similar thesis to the SPY chart, still watching right in line with that Thursday session, still below the 200. Still think this is going to be major resistance here. If we get above the 200, all bets are off. The thesis is broken, but for now, we are below that 200, waiting to see what happens. Momentum bearish, RSI still hanging in there above the SMA. And then looking at that hourly chart, we're still trapped in this same trading range between 477 and 486. We threw wicks to the 477 support area. That 144 EMA was support once again, and then we did find a little bit of a bounce into the close, but still below the 55 EMA there, so we're stuck in this range. During the session, we didn't even get up to 486.84. We touched that in the after hours yesterday, sold off from there. We did almost get above there here on the Monday, and then we broke back down below it on the close. So far, that is major overhead resistance. The trend line still in there is overhead resistance. Still waiting to see 477 break to the downside. Moving over to the Tasty charts here for the Qs, looking at that trailing stop. The old trailing stop was 45.14, and if it wasn't for that one tweet, which lasted for a very short amount of time and then immediately got below it here and then fell from that level, I would argue that this trailing stop is honestly still in play. 485.15 is that level. You can see the bullish condition is what it's actually showing right now, 477.63, which is pretty much in line with that trading level that we just talked about, 477.11 is the 144 SMA here on the Tasty charts, so a lot of confluence in that 477 area, but realistically, I'm also watching 45.14 as that resistance area as well. So I still think this is going to break to the downside, but still waiting for it to show that consolidation breakdown. Moving over to the Russell and the Dow. The Russell was up about a third, but still cannot get above that level, 198.75, as well as that 144 EMA continues to be resistance there at 199.71. So still looking at a lot of risk to the downside, momentum fading, RSI fading. And then same thesis here for the Dow as well. Tested that trend line once again, tested the level 412, could not get above either of those, rejected from there, and you can actually see a little bit of fading in the after hours here on the Dow. So this one looks even worse. The Russell did bounce just a few pennies after hours, nothing crazy. Still looking like a zone of resistance in my opinion. Moving over to Apple and Microsoft. Apple came out with the big announcement that they were adding AI to Safari, and nobody really seemed to care about that. Apple was down more than 1%. Apple continues to be a broken structure. We thought maybe this could be a low, higher low. This looks like we're about to cut through here. Momentum very bearish, RSI very bearish, continues to look bad on Apple. Broke below my key level 196.79, closed below it, did test the next level 193.96 today, caught a little bit of a bounce from there. We'll see if this zone holds or not. If it goes through there, you should be looking for back at this low. And I do think that that is a major possibility. I still think this is very much a downtrending structure. So we'll see. We'll see if it gets the follow through on that. And then Microsoft still holding up incredibly well, basically unchanged, only up 4 cents on the day. After hours up a few more pennies, but momentum fading, RSI super overbought. So Microsoft definitely the outperformer, continues to hold up there. Moving over to Tesla and NVIDIA. Tesla held up on the day. It was up about a third, still in the same range between 264 and 280. Can't seem to get above or below either of those levels. Still holding the 21 EMA, still holding the 55 EMA as support. We'll see. We're also above the SMA on the RSI, so a lot of support in here, continues to hold up really well, even though we rejected off of the 200. And then you can see NVIDIA had an amazing day. There was news that Trump is going to potentially lift some of the sanctions around semiconductor chips and potentially allow them to be sold to China. And on that news, they were up 3%. Huge move. Broke above that 116.70 level. Want to watch this level really closely. If it can get above 116.70, I think 124.69 is in play as your next zone. So that's what I'd be watching for. In fact, I'm going to go ahead and add an alert here. We're going to put that right in that kind of wick zone. Want to see if it can get above that. It is fading after hours. It's below the level after hours. So we'll watch this on NVIDIA tomorrow. If it can get through here, I think there's a major potential we could see another kind of $8 run on there. A little bit of opportunity on NVIDIA. Moving over to Amazon and Alphabet, major flip here. You can see Amazon up about 2%. Hanging in there, RSI hanging in there, momentum not so much, kind of flat in this zone here, but look at Alphabet. Alphabet reacting to the news that Apple is going to add AI to Safari, and that is going to cut into their search business, down 7.5%. This is a major risk to Alphabet. One of their major sources of revenue, of course, is Google search, and that is under threat now. And really the concern here for me now is this looks an awful lot like a bear flag. So you have a huge move down, consolidation, rejection off of this kind of upper trend here, pulled back right to the lower trend, huge volume on the sell. If it cuts through here, where you get a little bit of a rally, maybe a lower high setup at the level 160, 159, that is going to be a major potential for a huge move down on Alphabet, which I do think would trigger a lot of other potential sympathy plays here on Alphabet. So something to watch for. This looks like a pretty terrible bear flag setup. Moving over to staples and discretionaries, pretty much a nothing burger day here as well. Staples basically flat, still in the same zone. Discretionaries still below that 55 EMA, watching to see what happens here. 200.53 is your resistance, couldn't get to that level, still holding 197.14 as support, still in the same consolidation zone as momentum continues to fade in that area. Moving over to gold, I got asked about gold, so let's take a look at it. This looks extremely extended. We got all the way up into the 318 area. I didn't realize it had rallied that much. I remember not that long ago, I felt like I was making a 250 call in here, and we ended up getting that rally here through the 250, and then we consolidated for a while, ripped through that high clearly, and now we are rallying. Still very strong here, but the concern for me is really this RSI setup. So you can see the breakdown, retest, breakdown. This looks like a bit of a topping pattern, right? So you have a top here, a slightly lower high, maybe a double top, however you want to think about it. This is still super aggressive on the bull side. We're extended above all the EMAs as well. 9 EMA sitting down at 305.80. I would suspect that we're probably going to come down to that level before we see anything to the upside, which from current, that gives you about another percent and a quarter down. And then if we start to cut through these levels, you do have that lower trend line, which is about 6 to 7% lower, something to watch for there. But really for me, this just looks really extended. Want to see at least some pullbacks, retests of the trend, kind of like this. We did retest 21 in VWAP and held, and then got a little bit of a pop off of that. But now with this lower high setup, bit of a rejection here today, I would say gold is probably going to move a little bit lower, at least in the short term. Something similar to this. Moving over to breadth, market breadth continues to fade very slowly on 20 days, steps down over the last 3 days, momentum fading, RSI right there at the SMA. Technically, we are below it, 59.36 versus 59.43. Is this going to crater through there? Are we going to see a little bit of a bounce and then a push through there? Still remains to be seen. Of course, I am looking for that bigger move down, at least somewhere into the 50 range at a minimum, maybe a little bit more, and then 50-day breadth, same thesis here, still in this consolidation high area, momentum fading, RSI, looking for that to pull back a little bit more. Moving over to bonds here, you can see JNK and TLT. JNK was slightly positive on the news, and then TLT, same thesis, up about a half. Want to see this continue, get back above the 89.16 level, step towards bullish on the momentum, RSI back above the SMA there a little bit. Overall, still like this thesis. I've been talking about it all week, it feels like, but this is a zone of buying in my opinion, and I think this is going to go a little bit higher over the medium term. Moving over to the VIX. The VIX did touch that trend line and then reject from there just a little bit. Interesting to see that. Let's extend it out. Realistically, I still think this is going to go through here. Of course, I have a bearish thesis, so maybe I have a little bit of confirmation bias. This could be a breakdown, retest, breakdown. Momentum hasn't really gone with it yet. The RSI rejecting from that area, so that looks a little bit bearish. Maybe we do get a push through. Hard to say for now, but either way, we're still in the same consolidation with no real breakdown in structure. was just hoping for a little bit more of a pop off of the FOMC day. And then moving over to my accounts, I did take one trade, and you can see I actually held it here through the end of the session. I sold some calls. I sold some really far out of the money, really far dated calls out to 20 June at the 510 strike. I'm really banking on the idea that we're going to continue to stay below that 200 SMA, right? So if we do get above the 200 SMA, I'll take this off. But I sold those for $5 credit, so in theory, if the market did rally above 515 over the next 45 days, then I would lose money, but obviously I would not hold it anywhere near that long. Really, if we get above that 200 SMA on a closing basis on the daily chart, then I'm going to take this off. So for now, I'm expecting we're going to reject from that area, and I'll continue to watch markets in the zone that we're in right now. Let me know down in the comment section what you thought of the FOMC today. Was he more hawkish or was he more dovish? Let me know down in the comments. Otherwise, like and subscribe. If you got any value out of this video, make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.